Oil prices remain sluggish, trading below $45 a barrel. Saudi Arabia says it's not going to cut production, and stockpiles in the U.S. are expected to increase. Further, Nigeria's new president is on an anti-corruption campaign within the oil sector. To talk about where all of this is heading within the industry is Kyle Nichols from Aldrich Capital. Kyle, welcome to Arise Exchange. Good to see you. Your forecast, from what I understand, is $50 a barrel by the end of the year. How do we get there? It's a good 10% increase.
It's certainly indicative of where the market is right now. There's going to be increased demand throughout the end of the year and going into.
Why do you think there's going to be increased demand? We're seeing China slow down.
Refined products, simply refined products, industrials, chemicals will drive that demand. There'll be some market correction. There's been a slowdown, actually, in shale production here in the U.S. That's offset by the fact that...
Well, there's certainly been a slowdown in creating new production, right? I was in New Mexico just a couple of weeks ago, which was a huge boon with the fracking industry, and now teetering on a bust.
That's right. It's all debt capital funded right now, and
which is basically saying the oil companies are losing money on the fracking production.
Exactly, and they have to get loans to continue that funding.
But they haven't cut back production.
That's correct.
And that is probably because of the competition. They want to keep the market share.
Exactly.
Which is what Saudi Arabia is doing.
100%, yeah.
So now, at what point does Saudi Arabia start feeling the pressure and have to cut production?
Well, in OPEC, it's producing about half of the entire OPEC consortium's production. So,
and they drive. Saudi Arabia is OPEC for the most part.
That's right. And they'll keep market share because they'll look to go to new markets like Asia. There is gradual growth in Asian demand, and they'll look to compete in Europe, where Russia is the largest player.
Do you think there's any chance that OPEC kind of breaks up over this?
There's talk now of that happening. Certainly, they're entertaining that conversation for the first time.
That's certainly what the United States would like to see.
Absolutely, but the Saudis are the loudest voice in the room.
Okay. I want to ask you about Nigeria. The president is on this anti-corruption campaign, and that is impacting the oil markets.
It has. Nigeria sees about 70% of its federal government revenue from oil. And there was the former oil minister was just arrested in London, and Buhari has appointed himself oil minister as well as president. So it's certainly something that we'll see that market shake out. There are still very economic plays offshore in Nigeria, and they'll have to meet actually a demand in refined products.
Africa is very dependent on oil. Several countries in Africa, and very dependent on China in both directions. So you thinking that even though with the slowdown in China, we're going to start seeing a little bit of a firming up of oil prices, but still substantially off its highs from a year ago?
That's correct. We'll certainly see. I think the Goldman Sachs call from earlier this year, $45 a barrel. We'll certainly hit that, and we may see that $50 oil forecast price. And those Nigerian plays will still be very successful because they're producing at rock bottom prices.
What will dramatically drive up oil prices? What's out there that we don't know?
Undiscovered reservoirs. There's been a lot of development plays that have come online, or they're drilling development wells in East Africa, in South Africa, Madagascar. So those are the stories that we look at. And
but unless we see a major global upset of some sort of geopolitical crisis,
anything with Russia or Iran will continue to impact these prices.
Kyle Nichols, thank you.
Thank you.
Good to see you. Coming up on Arise Exchange, retailers get ready to sweeten deals ahead of the key holiday shopping season. Stay with us.